Welcome to Biz Wire. I'm Joseph Nordstrom in Beijing. China's currency, the yuan or RMB, continues to weaken against the dollar, hitting 11-month lows midweek. On Sunday, the country's central bank, the People's Bank of China, started allowing the yuan to rise or fall 2% in a day, up from the previous trading band of 1%. The moves are part of preparations for a freely floating yuan, possibly as early as next year. Speculators have booked easy profits betting on the yuan's rise, as it has steadily gained in value since 2005. But to discourage such bets that have led to distorted import and export figures, Chinese officials have acted in the past month or so to depreciate the currency to show the value can move down just as well as up. There are limits to how freely capital can move in and out of China, so currency speculators have issued fake export invoices to bring in dollars from abroad to pay for goods that never shipped. They then convert the dollars into yuan, which until now was assumed to appreciate. The weakened yuan seems so far to have worked to stop these flows, often referred to in China as hot money. Capital moving into China from abroad fell to a 5-month low of $21 billion in February, down from $72 billion in January. Trade figures were also down considerably in February, which analysts say is due to uncertainty over the currency. As of Thursday morning in China, the yuan was trading at 6.21 to the dollar, a big move from 6.05 seen at the end of January. Now, talking to the Wall Street Journal, senior economist at Crédit Agricole, Dariusz Kowalczyk, dropped the bombshell that speculators trading foreign exchange derivatives are, quote, exposed to unlimited leveraged losses north of 620. Traders have already been asked to add more collateral to their accounts, and as more close their positions, further downward pressure will be put on the yuan. The journal writes that sales of these structured products are slowing due to the yuan's recent movement. As China runs a very large current account surplus, up to now it's been assumed that the central bank will let the yuan to strengthen gradually. While the recent declines likely aren't big enough to trigger a stampede out of the yuan, the added volatility in the exchange rate may give some investors pause. Counterintuitively, a weaker currency could also work against exporters if greater volatility raises their cost of hedging. You're watching Biz Wire on the Blue Ocean Network, China's first and only privately owned English language broadcast media. Our full episode can be seen on our website, BONTV/biz-wire. Let's turn now to Neil Jones for a quick look at a few stories that are buzzing through the markets.